Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with Greg Dickerson, who is our expert on Monday and has hundreds of hours of videos you need to check out in his playlist. How you doing, sir?
Doing great, Michael. Good to see you.
Nice. Thank you so much for pulling over, doing this on the road. I know you are a very, very busy man. Something you helped this channel out with probably 6 months ago, maybe even 9 months ago, is you were starting to raise the alarm saying, folks, raise cash. Cash is not trash. Cash is an option on future opportunity. You must have done that 5, 6, 7 times, and I appreciate you. It helped me immensely raise dry powder. But I got to ask, is it too late? What's going on? Should we be raising more? Should we start shopping? What are we doing? Is it too late?
Yeah. No, not at all. And I'm going to say some controversial things, and people hate this, but cash is king. It always has been. It always will be. King dollar reigns. It's the world's reserve currency. That's not changing anytime soon. Even with what's going on, it's becoming more prominent than it has.
Yes.
There's positives and negatives of that around the world, globally, in terms of the value of the dollar. But it's the ultimate safe haven, and that's the second controversial one. Cash is king too. It's the ultimate safe haven, but it's not the ultimate store of value. There is a difference. There's a difference between king dollar. There's a difference between safe haven in turbulent times and store of value. I still am a firm believer that real estate is the ultimate store of value. I don't think anything beats it.
Agreed.
And the greatest wealth of all time has always been stored in real estate. Everything else, comes and goes. Property ain't going anywhere. You can neither create it nor destroy it. Buildings, yes, but not land. So, so that being said, I had this conversation this morning. You absolutely want to be in cash right now, even the high interest rate environment. You got to understand where the narratives of, deploy your cash, don't let inflation devalue your cash and all that. That's a Wall Street narrative.
Yeah.
They make their money on fees.
Exactly.
They got to have inflows. They got to push their products. If they don't have your money to manage, they're not making any money. So there's absolutely nothing wrong with having cash in the bank, earning 3% to hedge a little bit of that inflation burn, while you're waiting for things to turn, because when they do, you're going to be able to deploy that cash and you're going to wipe out, 10-fold, 100-fold what inflation did over the last 10, 20 years. So, you want to be, the biggest mistake people make is not having enough cash or dry powder to take advantage of bull markets after a bear market. So a lot of people will, say that you and me are bearish or I'm bearish or whatever. Here's what you need to understand. I'm a raging bull when it's time to be bullish based on the market cycle. Exactly. I'm extremely bearish when it's time to be a bear, given the current global macroeconomic cycle. And I'm neutral when it's time to be neutral. Yes. And there's very different times, global macroeconomic environment, and you have to take the whole picture into account, where people can say, macro doesn't affect this or macro doesn't affect that. It's all about fundamentals, and it's all about the global economy is joined at the hip. We're interconnected. You got to watch the entire macro environment to know when to make your big moves, when to be conservative, and when you're just full on defense protection. And right now, this is full on defense protection. This is all about preserving capital so that you can be in a position to take advantage of the next bull market in all assets. And when is that? When the Fed comes out and sticks their head back out of the sand and says, bull market on, we're dropping interest rates and we're pivoting. That's when it's bull market on and it's time to deploy cash. But right now, it's time to stack. It's time to be defensive. You're not neutral, you're defensive. This is full on defense. As soon as that changes, I'm going to be the biggest bull out there, and I'm going to be like, buy. It's time to go. As I was all the way up after the 2020, even in the March pandemic. After that, I was cautious, but it was like, man, look at all the money the Fed's pumping. Yeah. They did the same thing in 2008 and 9. They just did it over 15 years versus, 2 years.
Yeah. Crazy.
So that cycle will start again. It has to. That's kind of where we're at until and unless we get rid of the Fed and we take that mandate off of them, stable prices and full employment, and let the markets do what they do. You're going to see this, because that's what the Fed does. And that's what a lot of people miss. They don't understand. This is what the Fed does. They inject and they extract. They inject and they extract. And that's where you get these cycles.
Yeah. And for me, the person that I watch in this cycles are consumers, because again, as you know, consumers are 68% of the economy. If you can figure out where their orientation is, greed versus fear, you can make really outsized returns. Because one of the things that freaks me out is running with the herd. I like my skin crawls thinking about doing that. I'm always counter cyclical, or at least I try to be. One thing I did want to ask you about last week after we spoke, because you're in the crypto space, you watch it, all of that. There was this stable coin that essentially went to zero, and like $90 billion was wiped out in 48 hours. Um, and again, we've had this in money market accounts where it broke the buck. We had .com crash. Obviously, I was got by two public companies that were fraud. So it's not like this hasn't happened before. But for me, where I'm going with this is that a moment of capitulation? Is that a moment where, because again, people thought it was, I mean, I can't, people thought that coin was going to get them 20% interest or something, I heard. And then it turned out to be zero. People lost their life savings. Is this a moment where crypto goes backwards?
Well, not the entire space. So this was an isolated thing, and a lot of people, that specific project was an algorithmic stable coin, pegged to another coin. So in other words, what they were doing was say, hey, stake, buy this, Luna coin, stake that, and receive USDT in exchange, and we'll give you rewards. So a lot of these staking rewards, they're just printing new coins. They're inflating the supply. That's how they're paying you. So it's not like you're getting something that's scarce or limited. They're just
printing
inflating the supply and giving it to you. And what happened was it lost its peg. In other words, more people were redeeming than the algorithm could keep up with. And then when that failed, it just all of a sudden started hyperinflating, trying to keep up with the peg. And it went from, whatever it was, several billion in supply to trillions in supply in like 3 days. So it completely diluted. It would be like all of a sudden, Amazon stock, there's only 1 million shares out there. All of a sudden there's 10 million or 100 billion.
Exactly.
Whatever. So that's what happened to, the USDT lost its peg, or the US Terra lost its peg, went down to like 20 cents now, I think it is. And then the Luna was the other coin that it was trading in and out of. In other words, you buy one USD, it was supposed to burn, so much of Luna to cover that. And then when you sell a USD, it's supposed to burn the USD and, create Luna, that was an equivalent percentage. And Luna had gone up to like $100 or whatever. So that's a simplified way of a complicated algorithmic, stable coin that was basically flawed by design and was destined to fail. A lot of people were warning about that. Now there's other stable coins out there that are backed by real assets. So what a stable coin is, it's a digital currency that people use to buy and sell cryptos on exchanges. And the main reason people use stable coins is because you can get into those on exchanges where there's no KYC, you don't use fiat. You have to use fiat at some point to go in there and buy those things. But once you're in there, you can trade in and out without having to trade in and out of fiat, and you don't need a bank and all that. Once you're in there and the money's there, you can just trade all day long. So it's usually, that's why people use it versus me. I use the exchanges, and I fund it with dollars, and then I trade in and out of dollars. And a lot of people say, well, stable coins, you don't get taxed. No, you do. In the United States, they tax stable coin transactions, not the stable coins themselves, but whatever you buy and sell with them is a gain, just like dollars. So there are stable coins that are backed by assets, but they're not backed, none of them, 1-to-1 to dollars. In other words, the way it should be when you buy a stable coin, and this is what ultimately, if we ever get a CBDC, central bank digital currency, this is how it'll work. You buy one of those, the dollar goes into a reserve and it doesn't go anywhere else. It's a real dollar. So it's supposed to be pegged dollar for dollar. And that's what these things, a lot of them claim to be pegged 1-to-1 to US dollars, but they're not. They might own commercial paper, they might own treasuries, they might own bonds. And then usually they have maybe 10 or 20% of the actual reserve in cash. So what happens is when people want to go redeem those stable coins, and there's not enough reserves to fund that redemption, it starts losing its value. And then that just starts steamrolling, and it creates a run on that stable coin, like a run on a bank. And it ultimately just crashes because there's no reserves to back it up. And these companies that say that we're backed with these other assets, you need to understand, if you have to sell commercial paper in a pinch, you're not going to get dollar for dollar. You might get 10 or 20 cents on the dollar.
It could happen.
If you have to sell treasuries or bonds in a pinch, you're not going to get face value. You're going to sell them at a discount, because the way treasuries and bonds work, you buy them at a discount. You don't pay, $1,000, when you buy $1,000 bond. You're paying, $900. You're paying a discount. That's why bonds, they trade opposite of their rates that they
Correct.
offer. The
Mhm.
cheaper the bond, the higher the rate. The more expensive the bond, the lower the rate. So it's an inverse thing. So bottom line is, when somebody has to sell those assets that they're backing up these stable coins with, they have to sell them at a discount. They're not going to be able to cover redemptions, and they just print and inflate the supply because a couple of them are not regulated. They're not registered in any country that's watching them, and Tether is one. If Tether ever gets a run, they'll just print, print, print. Okay, there's nothing backing it up. They're just going to inflate the supply, and they're going to print, and they print and buy assets to put in reserves. They're totally going to, at some point, all that's going to come out. They will not release their audits. They won't release, any, they won't tell you what their paper is, what their reserves are, none of that. They say we don't have to because we're a private company.
Yeah.
Now they'll do attestations, which is you just pay somebody to say, yeah, you've got this, but that company never sees those things. They're taking your word for it.
Right.
They're not producing bank accounts. They're not producing proof of funds. They're not producing anything. So at some point, Tether's the biggest.
Yep.
Tether will at some point implode if they don't fix it while they can,
Right.
Which they can because they just print, buy, and sell. So they can build their cash and they can ultimately fix that. USDC is the next one that is more regulated. They've got the SEC filings and they've got a little bit more eyeball, but they're still not backed 100% by dollars. They've got some treasuries, they've got some bonds. Again, if there's ever a run, they're going to have to sell them at a discount. So, that's a long story short about the dangers and the risks in those markets. So you always want to use fiat trading on the exchanges that allow you, if you can. A lot of those exchanges guarantee your deposits because your deposits stay on the exchange. You can have a wallet that you can move stuff in and out of. So I'd just be careful with that and make sure that, you're not buying into something that's unsustainable if in the event of a run. But to answer your question, the crypto market is growing. There's talent pouring into the space. There's capital pouring into the space. The space as a whole is a lot of different things. And there's a lot of stuff that are, straight up scams. There's a lot of stuff that are zero back. They have no real backing. You got to understand these things are network effect technologies. So it's all hype for a lot of them, even Bitcoin. I mean, Bitcoin, is a different thing. And, a lot of people will say it is what it is, but at the end of the day, it's only worth what the network effect values it. And that's why it's dropped in value. If Bitcoin or anything other would have never dropped in value, it would just keep going up. Problem is it's a hype driven network effect space. And there's a lot of that in there. So that's where you got to be careful and just make sure you're investing in the right things. And, Bitcoin's not going anywhere. A lot of these other things generally aren't going anywhere, but a lot of them will, disappear, go to zero and be worth nothing, just like Luna and just like UST. So you got to be real careful what you're doing and what you're speculating on, because this isn't investing. This is speculating.
Absolutely. And the reason I wanted to go here is, again, back to the whole, is it too late to raise cash? I think what happened over the last 7-10 days, I think there's a lot more people that believed the hype, if you will. And right now they're like, get me out of there. I want to go to cash, right? I got to go.
And that's why the space yeah. And that's what's going on right now, because again, it's network effect. That's why you have these big bull and bear cycles every so many years.
Exactly.
Because you get people in there that buy in at the top, they get burnt, they never get their money back. So they go away and they never come back.
Never come back.
You got to bring new people into the space that get all hyped up and believe all the hype, but the assets have to return low enough to where you can make enough money to where people will jump in and they'll put their life savings in it. And that's what really ticks me off, is there's people out there at very high levels in the space telling people, mortgage your house, sell everything you have and buy Bitcoin or buy this or buy that. That's the dumbest thing you could ever tell anybody to do.
Absolutely.
You should never invest or speculate or risk more than you can lose, because you will. I mean, these things can evaporate overnight like we've seen. Even Bitcoin can happen. I'm not saying it will, I'm not saying it's likely. We've already seen Bitcoin tested in 2 severe situations, and it only went down to like 4,000. But it can go to zero. It's possible, just like it can go to 100,000. I mean, anything is possible in this space with these technologies. You got to look at what's likely, what's probable, and what's happened recently in the past.
Yeah,
kind of like real estate, right?
I think,
or anything, or stocks.
Yeah, I think anybody telling you to mortgage your home where your family sleeps, to put it all in on anything. I don't care if it's NFTs, stocks, baseball cards, freaking real estate. I don't care. Right. There are levels to this game, and then there's gambling and stupidity. Anybody telling you to do that, run away. They clearly have
Yeah.
too much skin in the game, and they're trying to build hype so that saves their ass.
So look, I'm very positive on the technology of cryptocurrency and the space and all
Yep.
that. I mean, it's, there's
It's
a
real.
lot of future potential. Again, a lot of real talent, pouring into the space, a lot of capital. But these, schemes and the hype that get people to do those types. And again, everybody's got to make their own decisions. So you can't force somebody to do it, but to promote those types of things that put people in a position where they lose everything because of that kind of a thing. We've seen it over and over, and we've seen it in the stock market forever
Oh, we
too. So
have.
it's nothing new,
Nothing new.
and everybody's got to make their own decisions and do their own thing. So all I can do is say, look, be careful, understand what you're getting into, make sure that you're not using more than you can afford to lose, and educate yourself so that you really understand the cycles, because not everything goes up forever. I've said, that a lot of the people, especially in the crypto space, a lot of these influencers out there and everything, they've never gone through a bear market. Now, they've gone through some bear markets in crypto, but they've never gone through a global macroeconomic bear
Right.
market.
Correct.
And that's what I'm talking about. When I haven't gone through a bear market, I'm talking about global macroeconomic bear market where all assets get punched and, take a hit. And that's what we're dealing with right now. And a lot of these people have never seen that, and they don't understand how long you can actually be in one and stay in one and not even know it.
Yeah, exactly. Great stuff. Greg, you have an amazing channel. You're helping people every day. Where do you want them to go?
Yeah, gregdickerson.com. That's where all the info is. And, like I said, when it's time to be a bull, I'm the biggest bull of all of them. And the time is coming, but it ain't right now.
There you go. Thanks, buddy.